Hello everyone, welcome back to my channel. In today's video, we are going to understand one of the most important ISO 20022 payment messages used in bank-to-bank transfer, that is pacs.009. This is also known as financial institution credit transfer message. Now, if you are learning about payments, SWIFT, ISO 20022, correspondent banking, CVPR plus, RTGS or high value payments, then pacs.009 is is a message you must understand very clearly. So most beginners first learn about pacs.008, which is used for customer credit transfer, but pacs.009 is different. That is, this is not mainly about a customer paying another customer. This is about one financial institution transferring funds to another financial institution. In this session, we will cover three important areas. First, we will understand what pacs.009 is and where it fits in the ISO 20022 payments family. Second, we will understand its structure. We will look at the group header, transaction information, settlement information, party roles, agents, and XML fields. Third, we will explain the three important variants. That is the pacs.009 core, pacs.009 cover, pacs.009 advice, using practical bank-to-bank examples. By the end of this video, you should be able to look at pacs.009 message and understand what business scenario it represents. And with it, let's begin. So, what is pacs.009? We are answering the most basic but most important question: what is pacs.009? pacs.009 stands for Financial Institution Credit Transfer Message. So pacs.009 is an ISO 20022 message used when one financial institution wants to move fund or money to another financial institution. It's a bank-to-bank payment message. It is sent by the debtor financial institution to creditor financial institution. The message may go directly from one bank to another, or it may pass through intermediaries, correspondent banks, or a clearing and settlement system. Now let's make this very simple. Suppose HDFC Bank wants to move USD liquidity to ICICI Bank. This is not a retail customer payment. This is not Raju paying Mohan. This is one bank moving funds to another bank. For that type of financial institution transfer, pacs.009 is used. Another example, say a bank may need to fund its Nostro account with a correspondent bank, or one bank may need to settle obligations with another bank. Again, this is a financial institution to financial institution movement, and pacs.009 becomes very relevant. In legacy MT messaging, similar bank-to-bank transfers were handled using messages like MT202, MT200, and MT205. In ISO 20022, the equivalent message is pacs.009 cover. Think of pacs.009 as the wholesale wire transfer of the banking world. Custom payments are like retail traffic, and pacs.009 is like an institutional or wholesale traffic between the banks. Now, let's place pacs.009 inside the broader ISO 20022 payments landscape. In ISO 20022, different message types are used for different payment purposes. The prefix the prefix PEX, which stands for payments, clearing, and settlement. These messages are mainly used in the bank-to-bank space. In the bank-to-bank space. So we have four important messages. First is pacs.008, second is pacs.009, pacs.002, and pacs.004. So pacs.008 is a customer credit transfer message. It is used when a customer payment is involved. For example, a corporate pays a supplier, or an individual customer transfers money to another person. In legacy Swift term, pacs.008 is broadly compared to what is MT103. pacs.009 is the financial institution credit transfer. Both the debtor and the creditor are financial institutions. In legacy Swift terms, pacs.009 core is broadly comparable to MT202, 200, and 205. Third is pacs.002 is the payment status report. It tells whether a payment has been accepted, rejected, pending, or processed at a particular stage. For example, if a bank sends a pacs.009 to bank B, bank B may respond with a pacs.002 saying the message has been accepted or the message has been rejected. Then pacs.004 is a payment return message. If a payment has already been settled but needs to be returned, then pacs.008 sorry pacs.004 is used. So pacs.009 is not an isolated message, it's a part of a payment lifecycle. A pacs.009 may be sent, then a pacs.002 may confirm the status. If the money needs to be returned, pacs.004 may be used. If there is a request, if there is a request to request to return funds, maybe some more payment messages like MT202 and MT202 may also come to the picture, which we will discuss later. Okay, now let's look at one important point, which is the legacy equivalence. So pacs.009 code is equivalent to MT202, MT200, MT205. And pacs.009 cover is equivalent to MT202 cover and MT5205 cover. So if you are coming from Swift MT area, this mapping is very useful. Again, ISO 20022 is richer than MT. It carries more structured data, better identifiers, and clearer party and agent details. Okay, now this one is extremely important because many learners get confused between roles like debtor agent, instructor, creditor agent, instructing agent, instructed agent, and so on. In pacs.009, we have two categories of roles. The first category is the static roles, and the second category is the dynamic roles. Now let's understand the static roles first. Static roles stay the same throughout the payment chain. They represent the ultimate economic parties in the transfer. The main static roles, as you can see on the screen, are debtor agent, creditor agent. Debtor is the financial institution whose account is debited. In simple term, it is actually the sender, or you can say the payer. Debtor agent, the financial institution servicing the debtor's account. So debtor agent is basically the servicing agent of the debtor. That means the debtor basically has an account with the debtor agent. Creditor is a financial institution whose account is credited. This is the beneficiary, or you can say payee. Then creditor agent is the financial institution servicing the creditor's account or the beneficiary's account. Now let's understand the dynamic rules. So dynamic rules can change at every leg of the payment chain. These rules describe who is sending and who is receiving a specific message on a specific leg. There are two dynamic roles basically. One is the instructing agent and the other one is instructed agent. Instructing agent is basically the sender of a particular pacs.009 message, and instructor agent is a receiver of a particular pacs.009 message. Now let's take an example. Suppose there are four banks, Bank A, Bank B, Bank C, and Bank D. So Bank A is sending to Bank B, Bank is sending to Bank C, Bank C is sending to Bank D. Now Bank A is the original debtor side, and Bank D is the final creditor side. On the first leg, if I compare this is the first leg. On the first leg, Bank A sends the message to Bank B. So here Bank A is the instructed agent, instructing agent, and Bank B is the instructed agent. On the second leg is between Bank B and C. Here Bank B is sending message to Bank C. So Bank B becomes the instructing agent and Bank C becomes the instructor agent. Similarly, it's same for the third leg as well. So if you can see from this example, the instructing bank and the instructed agents, the instructing agent and the instructed agents change on each leg, but the ultimate debtor, that is the Bank A, and the ultimate creditor, that is the Bank D, will remain the same across the chain. Okay, now let's look at the structure of a pacs.009 message. So at a high level, pacs.009 has two parts. The first part is the group header, and the second part is the credit transfer transaction information block. Now let's start with a group header. So group header basically contains information that applies to the entire message. For example, it contains message identification. This is also termed as message ID. This is the unique reference of the message. Second is creation date time. This tells the message. This tells when the message was created. Then it has a number of transactions. This tells how many transactions are inside the message. Then it also has the settlement information. This tells how settlement will happen. In pacs.009, grouping is not allowed in the same way as pacs.008. For pacs.009, generally, uh, one credit transaction, one credit transfer transaction information block is required per transaction. Okay, now let's move to the second part. That is a credit transfer transaction information. This is where the actual payment informations are captured. Payment instruction details are captured. It includes the payment identification, such as your instruction ID, end-to-end ID, UET, transaction, and so on. Then it has an interbank settlement amount and date. This tells the amount and the currency being settled between the banks. Then it has the uh, interbank settlement date. Okay, interbank settlement date basically tells the settlement date. Then it has a debtor and debtor agent representing the financial institution on the debit side, creditor and creditor agent representing the financial institution on the credit side. Then it might also have the intermediary agents if the payment passes to the correspondent bank. Then it also captures the remittance information, if any note or reconciliation text needs to be carried. Now, if you are reading pacs.009 XML, don't try to understand everything at once. First, divide it into two parts. One is the group header, other one is the credit transfer transaction info. Then ask yourselves, what does the group header say about the overall message, and what does the transaction information say about the actual transfer? So this approach makes XML reading much easier for you. Okay, now we come to a very important slide, the flavors of pacs.009. So there are three commonly discussed variants: pacs.009 core, pacs.009 COV, and pacs.009 advice. So let's understand them one by one. First is pacs.009 core. This is a straightforward financial institution to financial institution transfer. There is no underlying customer payment. It is used for bank to bank funds movement, liquidity movement, nostro funding, settlement between banks, or correspondent banking transfer. This is used for your bank to bank fund movement. Then it is used for your liquidity movement. It is used for nostro funding, even settlement between banks or correspondent banking transfers. In Swift MT terms, pacs.009 cover is equivalent to your MT202, MT200, and MT205, which we have already discussed in the previous slide. Second is your pacs.009 cover, where the COP basically means cover. Now this is used when there is an underlying customer payment, usually pacs.008. But the actual funds have to move through a separate correspondent banking chain. For example, corporate A pays corporate B. The customer instruction goes through pacs.008, but the actual settlement happens. Actual settlement of money moves through correspondent banks using pacs.009 cover. So pacs.009 cover carries not only bank-to-bank settlement details, but also a copy of underlying customer payment details. That is why it contains a special block called it contains a special block called underlying customer credit transfer. So this is very important for this particular block is very important for compliance screening, because even though the money movement is bank to bank, the underlying customer details must still be visible. Now third is pacs.009 ADV. ADV basically means advise. This is a CVPR plus concept. It is used to advise or pre-advise the creditor side that funds are expected. The important point is ADV itself is not the actual settlement movement. It's an advice message. The actual settlement happens separately through appropriate pacs.009 settlement instruction. It's almost like a cover payment on cover payments actually, but in here there is no underlying customer credit transfer when we are using pacs.009 ADV. It's actually between bank to bank, but with the structure of cover payment. Okay. Now, just to remember these three variants in a simpler ways, core is actually bank to bank transfers, and COP is bank to bank cover movement for underlying customer payment. And this is your advice or pre-advice by the bank that funds are on the way. Okay, now let's understand pacs.009 core using a serial payment chain. So this scenario is on the screen. So there's a bank A. So bank A wants to move funds to bank B, but bank A does not have a direct account relationship with bank B. So the payment cannot directly go from bank A to bank B. Instead, it moves through correspondent banks. So it moves through bank B and bank C. So this is the example of a serial payment chain, because the payment instruction travels step by step through the chain. Now let's understand the flow. So bank A sends pacs.009 message to bank B. Here bank A is initiating the financial institution transfer. Bank B receives the message and processes it. Now bank B debits bank A's account or processes the funds according to their account relationship and sends a new pacs.009 message to bank C. Bank C sends the payment to bank D, or credits the final creditor side depending on the final accounting relationship, and that is also done through pacs.009. The most important point in this is that each bank in the chain sends a pacs.009 to the next bank. So each leg, when we say leg, so every transaction between bank to bank is a leg. So each leg may have its own instructing and instructed agent. This example is very similar to sending an important important parcel from city A to city D, but there is no direct courier route. So the parcel goes from city A to city B, then city B to city C, and finally from city C to city D. So each courier leg has a sender and receiver for that leg, but the original sender and final receiver remains the same. That is exactly how dynamic roles work in a serial pacs.009 chain. The ultimate debtor and the ultimate creditor here, that is bank A and bank B, remain the same, but the instructing agent and the instructed agent change with every message leg. So whenever you see pacs.009 in a serial chain, ask who is sending this specific message, who is receiving the specific message, who is the ultimate debtor financial institution, who is the ultimate creditor financial institution. That will help you understand the message correctly. Now let's look at the XML example for pacs.009 core. The slide shows a sample XML for a bank to bank liquidity movement. The root element shown here is FI credit transfer. Inside that, we see the group header and the credit transfer information. Within group header, we have the message ID. This is the message identification. It immediately identifies this message, this pacs.009 message. Then we have the creation date time. This tells us when the message was created, and then we have number of transaction. This means the number of transaction. The message is 1. Then we have settlement information. Here the settlement method is in the. So in the means settlement by the instructed agent. In simple language, it indicates the settlement is handled through the instructed agent's account relationship. I have already explained this settlement methods in a separate video. You can go and watch it. Then we move to credit transfer transaction information block. So inside this block, we see the payment identification, payment ID. Then inside it we have instruction ID, instruction ID. So in FI to FI, then we have end-to-end ID. So in FI to FI transfer, sometimes end-to-end ID may not carry a meaningful customer level reference. So in this case, not provided may be used depending on the rules and implementation. Then we have UETR. UETR basically stands for unique end-to-end transaction reference. This is very important for tracking the payment throughout its life cycle. Next, we have the interbank settlement amount. This tells us the settlement amount, and here the amount is how much? 1 million USD. Then then we have interbank settlement debt. Um, then we come to the agent details. We have the instructing agent. This means HDFC Bank is the instructing agent for this message leg. Then we have instructed agent. Here it means JP Morgan says is the instructor agent for this message leg. Then we see the debtor and creditor details. The debtor is basically the HDFC Bank. The debtor agent is also the JP Morgan says. Creditor agent is Citibank in US, and the creditor is basically the ICICI Bank. So in business term, HDFC Bank is moving USD liquidity to ICICI, and the movement is happening through correspondent banks such as JP Morgan Chase and Citibank. So there are no retail customer names here. There is no individual customer. There is no individual pair or beneficiary. This is a financial institution transfer. That is why this is pacs.009 core. The key learning from this example is in pacs.009, the message is about FI to FI money movement and not customer remittance in pacs.009 core. Okay, now we move to pacs.009 cover. So this is one of the most important concepts in correspondent banking. Let's take a scenario from the slide. So corporate Y wants to pay corporate Z. Now corporate Y banks with agent A, and corporate Z banks with agent B. So the customer payment instruction flows from agent A to agent B using pacs.008. But here's the problem: agent A and agent B may not have accounts with each other. So even though agent B receives the customer payment instruction, the actual money may need to move through reimbursement agents or customer or correspondent agents. This is where PAX 009 cover comes to the picture. The flow has two legs. The first leg, this is the first leg. The first leg is the customer instruction leg. Now agent A sends PAX 008 to agent B. This tells agent B that my customer wants to pay your customer. Here the customer details, purpose, remittance information, beneficiary details. The second leg is the settlement leg or cover leg. Here agent A also sends a pacs.009 cover through a correspondent bank, for example agent C and agent D, to move the actual funds. So pacs.008 tells the beneficiary bank what the payment is about, and pacs.009 cover moves the actual funds to the correspondent banks. This is similar to the legacy SWIFT concept with a combination of MT103 and MT202 cover. So the payment example that we have discussed using agent A, agent B, customer Y, corporate Y, corporate Z is very similar to sending an invoice copy to the seller saying payment is coming. That is like pacs.008. Then your bank sends the actual settlement money through banking channels. That is like pacs.009 cover. And this is pacs.009 cover is very common in cross-border correspondent banking. Now let's look at the XML example of XML sample of pacs.009 cover. At first glance, it looks similar to pacs.009 core because it also starts with the FI credit transfer. Then it has group header, it has message ID, it has number of transaction. Then we move to credit transfer transaction information. Here also it's inside this again we see payment identification, UE tier, settlement date, settlement amount, settlement date, instructing agent, debtor, creditor, and everything the same as similar to pacs.009 core. So far it looks like bank-to-bank funds movement, but the most important difference appears in this block: underlying customer credit transfer. This block is what makes the message a cover message. Inside this block, we see the customer payment details, the initiating party, the debtor account, the debtor agent, right? The creditor account, then remittance information, and so on. Now, because this is a cover payment, the pacs.009 cover must carry the underlying customer information. Because even though the money movement is bank to bank, regulators and banks still need the visibility into the real originator and the beneficiary of the underlying customer payment. So you must be able to understand that if the pacs.009 contains this underlying customer credit transfer, if you see this particular block, you should be able to understand that this is a cover message. Okay. Okay, now let's understand pacs.009 advanced. This is a concept that can confuse many learners, so let's go slowly. And now ADV means advice. Pacs.009 ADV is used to inform or pre-advise the creditor side that funds are expected. Mostly this pacs.009 advice is mainly communicated between the banks only. There is no customer involved. Um, it's an advice message. It tells the receiving side that a financial institution transfer is expected and funds are on the way. In a cover style setup, the actual settlement instruction may travel through the reimbursement agents or correspondent banks, but the advice message may be sent directly to the creditor side so that they are aware of the expected incoming funds. Let's imagine. Let's see an example. So bank A or agent A is sending funds to bank B. The money will actually move through bank C and bank D. But bank A may send an advice directly to bank B to inform that the funds are expected. So there are two areas, the settlement leg and the advice leg. The settlement leg basically moves the actual funds through the banking chain, and the advice leg informs the creditor side directly. So this helps the creditor side prepare for the incoming payment, reconcile expected funds, and understand the upcoming movement. Similarly, pacs.009 advice does not settle the this does not settle the money. It just advises the money movement is expected. This is very similar to like pacs.008 for the underlying customer payment. Now let's look at the pacs.009 advice XML sample. Here again, the format is same. It starts with the FI credit transfer. Then we have the group header. Then we have the credit transfer transaction information. We have the payment ID. We have the settlement amount, settlement date, instructed agent, debtor agent, creditor, creditor, um, creditor agent, and creditor. Then we see the what is it? Then we see the remittance information. So this remittance information basically gives you the clear picture. This line tells us the purpose of the message. It's a pre-advice of the incoming FI transfer. So this is how this basically is a differentiating factor for pacs.009 core. Otherwise, if you see above this whole format, you are very much similar. You are very much familiar, or you have seen in pacs.009 core and pacs.009 cover as well. Now let's look at a comparison table between these three variants. For core, the message contains FI to FI settlement details. The business purpose is simple, to move funds between financial institutions. For cover, the message contains core FI transfer details plus the underlying customer credit transfer block. The business purpose is to cover a customer pacs .008 through correspondence. For advice, the message contains advice details usually sent directly to the creditor side. The business purpose is to inform the creditor side that an incoming FI movement is expected. So the easiest way to identify the variant is if you only see financial institution transfer details, then it's a pacs.009 core. If you see an underlying customer credit block, then it's a cover. And if the purpose is to pre-advise the creditor side and settlement happens separately, then it's a pacs.009 advice. Now let's understand the most important data elements in pacs.009. The first is EVTR. So EVTR basically stands for unique end-to-end transaction reference. This is a unique identifier used to track the payment throughout its life cycle. In modern payment tracking, EVTR is very important because it helps bank trace where the payment is, what status it has, and whether any investigation is needed. Second is BIC. Big FI is actually a bank identifier code of a financial institution. In a payment message, agents are commonly identified using their bank identifier code, or simply it's a BIC. For example, your HDFC Bank identifies using this particular format, HDFC INBBXXX, then and so on. The third term is interbank settlement amount. This tells the amount and the currency actually being settled between the financial institutions. For example, um, it will basically display you the amount. In legacy MT message, this is comparable to field 32A, where amount, currency, and value date are captured. The fourth one is payment identification. This includes your references like instruction ID, end-to-end ID, transaction ID, and EUTR. These references help banks identify, reconcile, track, and investigate the transaction. The fifth is instruction for the creditor agent. This is used when free-form guidance needed to be provided to the creditor agent. But one important point is in pacs.009 there is no direct instruction for the next agent field like people may expect from MT style thinking. So you need to understand the ISO structure carefully. The sixth is the remittance information. This is used for your reconciliation notes or additional information. It is an unstructured text with maximum of 140 characters. So when you are reading pacs.009 XML, try to focus on this key elements first. This will allow you to understand 80% of the message very quickly. So now let's understand what happens after a pacs.009 is sent. A payment message does not end the story. After a message is sent, a different status, return, and investigation message may also come into the picture. The first is pacs.002. The pacs.002 is used to communicate the status of the payment. It may tell whether the payment is accepted, rejected, pending, or processed. This we have already seen in the starting slide. For example, Bank A sends pacs.009 to Bank B. Bank B checks the message. If everything is correct, Bank B may send a pacs.002 with an accepted status. And if something has gone wrong, such as invalid BIC, incorrect settlement date, or compliance issue, Bank B may send a rejection status. Second is pacs.004, which is payment return. It is used when a payment has already been settled, but the funds need to be returned. For example, suppose a pacs.009 was settled, but the receiving bank later realizes that the account is closed or the transaction cannot be applied. In that case, funds may be returned using pacs.004 with a region code. The third set of messages is MT056 and MT029. MT056 is a request for cancellation or return. MT029 is a response to that request. Let's take a simple example. Bank A sends a pacs.009 and later realizes that it was a mistake. It may send CAMT056 requesting return of funds. The receiving bank reviews the request and replies using CAMT029. If they accept the request, they may proceed with the return, or if they reject the request, they will provide a reason. Then we compare the pacs.008 and pacs.009 clearly. First, the full name. So pacs.008 is customer credit transfer. Pacs.009 is financial institution credit transfer. Parties. In pacs.008, at least one party is non-financial institution customer. It may be an individual, corporate, merchant, government entity, or any non-bank customer. In pacs.009, both debtor and creditor are financial institution. MT equivalent, pacs.008 is equivalent to MT103, and pacs.009 is equivalent to MT202, 200, and 205. Fourth is grouping. So pacs.008 can allow multiple transactions per message depending upon the user's rules and scheme guidelines. And pacs.009 generally does not allow grouping in the same way as pacs.008 allows. It is only one transaction per message. Fifth is typical uses. pacs.008 is used for customer payments such as invoice, salary payments, supply payments, retail transfers, corporate payments. And pacs.009 is used for correspondent banking, liquidity transfers, nostro funding, bank-to-bank settlement, financial institution transfers. Now let's understand what pacs.009 is used in the real world. The first area is the correspondent banking. This is probably the most common and context where many learners will hear about pacs.009. Banks maintain the Nostro and Vostro accounts with correspondent banks to support cross-border payments and liquidity movements. For example, an Indian bank may maintain a USD Nostro account with a US correspondent bank. If the Indian bank needs to fund that account or move liquidity, pacs.009 may be used. The second is the real-time payment system. Sometimes some real-time systems may use pacs.009 for institution level transfer or advice of credit between financial institution. In such systems, pacs.009 can be part of the bank-to-bank settlement or notification. The third is high value payment system. RTGS and SBPS aligned market infrastructures use ISO 20022 messages for high value payments. In this environment, pacs.009 is important for FI to FI settlement messages. For example, if one bank needs to settle funds with another bank through a high value payment system, pacs.009 may be part of that messaging framework. The fourth area is drawdown transfer. In some scenarios, one financial institution may request another financial institution to transfer funds based on a drawdown instruction. So pacs.009 can be used to honor such interbank drawdown transfers while keeping the roles consistent end to end. So that brings us to the end of this session on pacs.009, which is financial institution credit transfer. Thank you for watching this video. If this explanation helped you, please like the video, share it with your friends, subscribe to the channel for more practical videos on payments. With this, see you in the next video. Bye.